Wednesday, September 28th, market analysis, Stan Ehrlich, and we have a really good day going here. The bottom that I've been trying to pick for you guys looks like it's about to be confirmed, quote unquote, to a certain extent. I'll explain. Remember, last Friday we gapped down, and gaps are almost always closed. I'm using the spider every day. That's my favorite index. I do refer to the Qs and the DIA and the 2000. Usually very similar information, but not quite the same. So the spider gapped down below what was an important support level of 372 to 370 and a half, only $1.50 range, and it dropped below it like it never existed on Friday. So there's a gap. Gaps are almost always closed. One reason to go back up and close the gap at a very bare minimum, and I'm looking for a lot more than just 372 on this rally. We're 68 and small change at the moment. Secondly, the market's been oversold for a couple, 3-4 days now, and as a result the odds are very high that there's going to be some sort of a rally. Doesn't tell me how much of a rally, it doesn't tell me how long it's going to last, but a rally. And I expect it to close the gap at 372. But listen here, Friday, Monday, Tuesday, and today, Wednesday, you've got approximately the same trading range, although, yeah, yesterday was a lower low for the whole bear market. I said in my video and or market letter, ER signal report, that the closing yesterday was right at the previous lows and looked like a bear trap, or what's called also a washout. And that implies that there'll be a rally the next day, which is today. We are now up about 5 points almost. We're relatively close to the high of the day. Here's the important part. If we can, and I think we are going to, in the next 3 hours, be able to rally above yesterday's high of 370.40, there's going to be buy stops above there. It's going to start pushing into the gap area, and we're going to probably, I hope, crossing my fingers, that we're going to close above 370.40, 370.50, maybe above 371, and it could be even more than that. I'd love it if it closed above 372. Yeah, a little bit of a stretch. Remember, we're already up 5.03. But hey, you know, another 3-4 points is not impossible by any means. This market has historical support. It was the old June lows, although we broke it by a slight bit. So, gap to close, oversold, historical support. We're starting to come up. We seem to have had a bear trap or a sell stop washout. Plus, just a moment, we have a variety of other things that I really think are going to help in the next few weeks. Oh, also the October lows are very close now. Was yesterday the October low, the lowest low for a couple of months to come? Sorry, I can't really say yes. There is a chance of that. I want to say yes. I just don't have enough evidence to seriously imply that that is the lowest low. I think there's a pretty good possibility. I just need to see more strength in the next day or two. Hang in there, stop at the highs and so on, keep on going, etc. The October lows has another major historical long-term cycle low, seasonal cycle low, that's got a historical record of somewhere in the high 80s to low 90s for the last 30 years plus. That's backed up by other analysts saying the same kind of thing as well. Now, the other corroborating evidence. First of all, I'll point out that natural gas had a bearish engulfing ER signal, bearish engulfing smack dab, August 23rd, top of the market, doing great, making new lows for the move down. No ifs, ands, or buts about that. Here we are, full chart, full screen, sorry. And so far so good. Except, please, it's oversold. Deserves a bounce. No change in trend though. Next chart. We had a bullish engulfing ER signal on the 19th of September. Made a tiny lower low 2 days ago, but rallying nicely now, so that signal was pretty good. Obviously not as good as a sell signal smack on top of the market, which is why I built this over the last decade plus automated, 100% automated trading system. Next chart. Here we go with gold. Interesting. Major bullish engulfing, and the second one in the last 5 days. Sometimes my signals cluster in a matter of a couple of weeks. Back here we actually had 1, 2, 3, third one, the bottom of the market, and a couple days later, 4 days later, 4 bullish signals. One of them caught the very bottom. It could only be one, of course, of the 4. But now we have 2. So I'm expecting a pretty good rally in the gold market coming up immediately, next few days. Aha! Here's the important one. Interest rates. We have a bullish ER signal, an outside up day, an oversold condition for the bond futures market, the 30-year long bond. And we have a 10-year note bullish engulfing, the same signal with a really good recent track record. Not that that's going to continue necessarily. People believe that's going to happen, but you know, not necessarily the case. I don't like to be misleading to people, but it's a buy signal. If it works, it works. If it doesn't, I got to stop in. Protective stop, or stop loss, commonly said. So we just got out of a short, made almost 10 points. The previous trade made 14.5 points. So I'm liking what I'm seeing. When these charts, the bond futures and the 10-year futures go up, that implies rates are easing, starting to slip a little bit. And that would help the market, you would expect. So brand new bullish engulfing gold, 30-year long bond, 10-year note. The platinum buy signal from a few weeks ago worked really well. Then we had a sell signal on September 22, and it has come down nicely, although today it's popping back up somewhat. Anything else? Crude oil got oversold and is rallying a little. That's not particularly good, but it's a very small amount, and the bear trend is still there. And the heating oil, same kind of commentary exactly. So let me show you this October low again real quick. The green bars represent the month of October. The green arrows in the green circle, the black arrows in the green circle, excuse me, represent when I'm expecting, because this is in the future for the moment, the October lows, which is generally speaking the middle of October. I don't know. It could be early, late, but hopefully in October. Again, my earlier comment, maybe yesterday was it, a few days early. Previous year, just in time. Previous year, during October. Previous year, the week ended October 4th, probably in October. Previous year, in October. Previous year, not particularly profound, didn't go down very much, but if you bought in October, you would have made money. This was the low, and on and on and on. So that's the October low series. Got a comment about the euro dollar. Wow. This is a new low for over 20 years. We actually got down to 95. I think the low was 95 something this morning. 96.68. Not quite 95. And that is an oversold condition for the last couple of weeks. And probably about to start very soon for the euro dollar, a rally back up to about 404, 405, maybe a tiny bit higher. But that's a pretty decent, you know, 8, 9, 10 point rally. So I'm starting to turn, let's just say, less bearish on the euro. I don't have a signal yet, but it looks like it is trying to or about to turn back up again. Anything else I want to comment here about this? Oh yeah, there's a gold cycle. Not only do I have a bullish signal today in gold, it also is landing right in the middle of a historical rhythm that is approximately 333 days in length. The green bars are 10% of that time frame, so about a month. If I go back to the example that happened in June of 13, 9 years ago, it was a whopping bullseye. A little late, but still in the cycle time frame, or what we call the window of opportunity. Woo, window of opportunity. It worked, and that was October of 2014. It didn't happen on time. It was a month or so early in late 2015. It was a little late, but on time during the month, the cycle low window of opportunity. On the next cycle low, which was due in the neighborhood of July 17, this was a whopper. Although I didn't get a bullish engulfing, the green lines point to ER buy signals, and they happen frequently at the bottom or very close. But no signal here, but the cycle worked. By the way, it prompts me to mention the Foundation for the Study of Cycles.com. You want to go there. There's a heck of a lot of historical research in markets, as well as many other different historical rhythms and items you would never imagine having historical cycles. Did you know there was a 100-year cycle in pandemics? Yep. So those of us that are still around 100 years from now, watch out. Okay, decent buying opportunity, not on time. Also, the one just before this current time frame worked okay. It wasn't really as timely as I would have hoped. I think I'm going to leave you with that. We covered the bonds, bullish engulfing. I don't have any other... Oh, I'll mention it. Yesterday and the day before, I was thinking that the orange juice is going to go down like the natural gas. Made a little joke about it. We seem to have had a head and shoulder top in OJ. But unfortunately this morning, the market jumped up, killed the signal, and has made a new high, so the head and shoulder top is dead. Anybody who went short should have gotten stopped out pretty much around the opening, frankly. The head and shoulder top working in natural gas is doing just fine, but it's already a little oversold, so a small bounce. And then here, okay. That's it. Stan Ehrlich, signing off. Talk to you tomorrow. Thanks for listening.